What investors are looking for is growth, and they're looking for a well-run company, and they're looking for something with a big opportunity in front of it, and we have all of those things.
So MuleSoft deals in the cloud with applications. Break down for us briefly what exactly you all do for your customers like Coca-Cola or Bank of America.
Yeah, so all of these companies today have to deal with a massive explosion of applications, data, and devices, and connecting all of those things together is incredibly difficult and expensive, and we help them build out something called an application network to make all of those connections happen.
And that application network connecting all of those different technologies, it's something that the likes of Oracle does, that IBM does, and also a lot of providers write their own code to compete with what MuleSoft offers. How are you blocking and tackling to be sure that you're the go-to to connect all of these different data points and technologies?
Yeah, I mean the big challenge for everybody is how to do it without writing custom code. 99% of the world is still writing custom point-to-point code to make all this happen. And so we have to provide the best product and the best platform to do that, and what we do is we provide just this amazing developer experience to make it really easy for them to develop this integration.
And Greg, you talked about investors' need for growth. Over the last 18 months for the enterprise companies going public, we've seen an interesting shift. It went from really wanting revenue growth to being more concerned about profitability. And when I look at your financials, free cash flow specifically, it was down 44% 2 years ago, last year down 4%. Seems like you've reined in cost there. What were you thinking about fundamentally in the run-up to the IPO? How important was profitability to be able to show investors that you can get there one day?
I mean, the key is to have a balance. So it's not growth at all costs, and it's not profitability at all costs. You want to grow well, and you want to grow it in a sustainable way. And what we've been doing is reining in the cost, but also growing extremely well, growing 71% last year. So it's keeping that growth up, but also being very cost conscious at the same time.
And that cost consciousness has kind of descended on Silicon Valley lately. What was the catalyst for you to say, look, we need to take a good look at where we're spending money? Was it getting IPO ready? Was some of your backers advising you on these things? Where did that real decision making come in?
Yeah, it wasn't driven off of going to an IPO. It was just as you get bigger and as you build a larger company, with the growth rates, you want to demonstrate that you can build a company that has a sustainable business model. And so we just knew at that point that we needed to start showing that.
When I look at where your revenue's coming from, a lot of it is from those recurring revenue streams that you talked about. Some of it also is revenue from installing and getting the product in there. Where will the mix look like over the next 12 to 18 months? Where's the growth going to come from? Is it the flagship product? Is it a new line? What are you looking at?
Yeah, it'll be the flagship product. So the services work that we do is somewhere around 15 to 20% of our revenue on any given year, and that will remain about constant over time, but it's really going to be the flagship product, that application network that we help people build out, that will continue to be the growth driver for MuleSoft.